Your tax bill may be a harsh revelation if you bought crypto last year. The IRS considers cryptocurrency to be property for the tax purposes. Therefore, it is taxed similarly to conventional assets such as stocks or gold. Tax season started on January 24th of this year, 2022. In 2021, numerous and new investors entered the crypto market for the first time. In the last year, more than half of existing Bitcoin investors have started investing. With many all-time highs and lows during the year, many investors saw big gains and losses. Many people joined the crypto world in the last 12 to 24 months may be paying for their first crypto taxes, says Laura Walter, a certified public accountant and founder of Crypto Tax Girl. Accounting for crypto online exchanges is simple for most people. It's true that the more involved you are with digital currency, the more confusing it becomes. Here's everything you need to know about the activities you may need to disclose to the IRS in 2021. When to report cryptocurrency trades. Buying Bitcoin using dollars. You won't owe taxes on virtual currency you acquire with dollars if you keep it within the exchange or move it to your personal wallet. According to IRS instructions on Form 1040, if your only crypto-related activity this year was buying a virtual currency with cash, you don't have to disclose it. Using crypto as a medium of exchange triggers taxation. Selling cryptos for money, trading crypto for crypto like buying Ethereum with Bitcoin, or paying for goods and services with crypto are all examples. A taxable transaction occurs when you sell or exchange an investment for another, explains Daniel Johnson, founder of RE Focus Financial Planning in Asheville, North Carolina. You have to be careful if you trade a lot. Every time you exchange different forms of cryptocurrency, it is a taxable event. Walter said the IRS is scrutinizing Bitcoin transactions this year and targeting tax evaders. This year might not be the year you get away with not disclosing your crypto on your taxes, she warns. When will crypto taxes be due? Because the IRS considers virtual currencies to be property, their taxable value is determined by capital gains or losses. To receive something or get another asset, you have to spend a capital asset, so you have to pay capital gain taxes, explains Xian C, CPA, head of tax strategy at CoinTracker.io, a crypto tax software firm. The difference between the cost basis of the crypto and the sale price is the capital gain or loss that you record on your tax return. In general, if you bought $100 worth of Bitcoin and sold it for $500, you'd make $400. You'd lose money if your Bitcoin value dropped during that time. Excess of losses can be deducted up to $3,000 from your taxable income for individual filers. Also, how long you've possessed the crypto matters. Generally, holding Bitcoin for more than a year qualifies as a long-term capital gain, or a short-term capital gain if you buy and sell within a year. These distinctions can impact tax rates. The tax rate varies depending on your total taxable income, and capital losses are limited in your crypto asset loss value. You can utilize Form 8949 to reconcile capital gains and losses and then report them on Schedule D on your 1040. More information and tools on crypto-related taxes can be found on the IRS's website. Receipt of crypto. Some people get paid in virtual currency. To earn Bitcoin, you can either mine new coins or receive coins or tokens as a reward for certain behaviors, like Coinbase's Earn Reward program. Regardless of how you acquired it, you must record the value of the crypto in a US dollar form and report it on your tax return. As a freelancer, I have to pay myself in Bitcoins, and I have to take the fair market value of that Bitcoin at the time I received it. Now, if Bitcoin is worth $54,000, I must record $54,000 as personal income. A taxpayer who gets virtual currency as a payment for goods and services must include in gross income the virtual currency's fair market value determined in US dollars on the date of receipt. The fair market value you collect becomes the cost basis for that coin, which you must track. So, if you use Bitcoin to buy something, you'll need to reconcile its cost base with its value. Notably, when dealing in cryptocurrencies, you must maintain account of all potentially taxable operations as well as the fair market value of your crypto. The IRS only offers broad advice on keeping records for tax purposes. They should be sufficient to establish the positions taken on tax returns. The agency suggests keeping track of when you receive, sell, or swap virtual currency as well as its fair market value. This is scary, White says. Tracking the cost basis and making sure you're doing it appropriately is when it gets really tricky, he says. Rarely will an exchange provide you a form like 1099-B to assist you calculate your gains and losses. Ultimately, you are in charge of tracking your taxable activities and currency worth. That won't be the case in 2023. Parts of President Biden's $1.2 trillion bipartisan infrastructure bill requires brokers, aka Bitcoin exchanges, to send 1099 forms. In other words, crypto exchanges will have to tell the IRS directly. The cryptocurrency exchanges will not be providing tax forms this year. The 1099 bill will be for 2023. You won't get a 1099-B in 2021 or 2022. It's easy to track or generate information about your transactions if you leave your virtual money in your exchange account. Moving money between private wallets or having crypto in numerous places necessitates greater tracking. You can utilize crypto-focused tax software to streamline the procedure. The software will calculate your cost basis for your trades and assist you in calculating your capital gains and losses if you input data from all exchanges you utilize. CryptoTrader.tax, Token Tax, and CoinTracker are all compatible with traditional tax softwares like TurboTax and TaxAct, allowing you to effortlessly import your earnings and losses. Preparing for tax season with crypto. To simplify your crypto-related 2021 tax filings, start planning now. Even if that's how you usually approach tax season, don't put it off filing until April 1st, 2022. You don't want to be attempting to catch up with a year's worth of crypto activity in April. You actually want to approach it more like a business, making sure all your taxes are up to date, monitoring things appropriately, and being more proactive. It's quite basic for most people. W-2, 1099 interest documents, and possibly crypto, add C. They don't need a CPA. They will want a CPA to sit down and undertake tax planning and tax saving strategies. Consider hiring a pro. A tax professional who has knowledge reading tax code linked to virtual currencies may be able to help you even if you aren't conducting intricate crypto activities. The IRS and other agencies cannot address every case that arises, and present advice is lacking in many areas. To report Bitcoin earnings and losses, a tax expert must be aware with current IRS regulations according to C. Ask potential tax professionals whether they possess virtual currency and if they understood the tax code. Ambiguous. In certain cases, CPAs should step in and say, okay, we don't have a clear guidance from the IRS, but this was the objective when they set up the guidance. As CPAs, we should be able to apply our experience and knowledge of the tax code to the individual instances we see. Well, guys, what do you think? Tax returns in crypto. It's something that's going to come, eventually. So just let me know what you guys think in the comments down below. If you like this video and you stayed to the end, I thank you so much. Please like, subscribe, and stay tuned for the next video. I got another one coming. CryproWrld out.